They're lining the streets wall to wall from Wall Street to Baltimore, waiting in line all day long, only to find that once they get inside the neighborhood Walmart, they bought them all. See, who's to decide which side to side with and what the problems are, and who we ought to be most proud of once they declare that the problem's solved. Heroes of our time, I guess. So what up, world? Richard Johnson here. This is my channel, Iconoclast, where we discussed a wide array of topics, relevant topics, meaty subjects, all through an economic lens. I, as an individual, truly believe that the biggest battle that we're going to be facing, and the one that we're actually facing right now, is more wealth-based. It's economic. It's not so much rights-based, where we were at a point in our time where everybody was more or less fighting for their rights, fighting to be heard, trying to be a part of the political process. I believe much of what we're experiencing right now is driven primarily through not only the markets, but through the profit motive. And so what I want this channel to be is more of a discussion centered around how we ought to advance as a society economically. I really want to pick up from last discussion where we were talking about the coronavirus and how that was affecting consumers and how that payout was benefiting some and still leaving others vulnerable to the conditions that we're currently in. But today I really want to focus on, shift gears, and talk about businesses, how the businesses are doing in this type of climate that we're in, and how the government's role in distributing funds, whether that be loans, grants, or straightforward payouts to these businesses, and how that's affecting that mom and pop shop on the corner, how that is affecting small businesses, black-owned businesses, larger corporations, and the more. But nevertheless, let's get into it. We need money now. Because these businesses are all flocking at one time, then the greedy hustlers come to play first. The majority of these businesses can't survive beyond a 3 to 5 month mark, and we don't want to send ripples, earthquake-like ripples through the economy. So they must decide, right, who gets fed and who gets fat and who can stand to lose a few pounds. And economics is about the science of answering the question, and then what? So to kind of put this in a framework that's more or less relatable, I remember when I was in college, they used to have these periods where they would distribute free shirts, right? You would get this text message from a good friend of yours, or you would just be walking by on campus and you would notice that they were passing out free shirts. And I was unfortunate. I was always that guy that was either stuck at the back of the line, or I had class at the time that they were handing out these free shirts. But when on occasions I just so happened to make it in the line, what I always found out was that if I was patient enough to make it to the front of the line, they were either sold out or I was only stuck with either a double X or an extra small. So it was always like the medium and the large shirts that ran out first. This is expected, right? This was as a result of them handing out these shirts for free. So that's kind of the predicament we in. I draw that scenario, or paint that picture rather, to draw parallels to the type of conditions that businesses are facing as it relates to the government's payout. And so the government, as a part of this CARES Act, has decided that they were going to begin with providing aid to the consumers, which we discussed in a previous episode. So if you haven't gotten the opportunity to view that, right, we discussed how that $1,200 payout was affecting the consumers. And once we got them out of the way, now we wanted to focus a little bit more on businesses. And so this next large payout, which is still a part of the CARES Act, is to take financial aid and give it directly to these businesses. And so one of the first ones I really want to dig into a little bit deeper is the Paycheck protection program, right? So this program is a loan guarantee of up to roughly $10 million if you qualify. Now, it's a loan guarantee, which means that the normal standard that would normally disqualify people or businesses from receiving this loan has been substantially reduced. Or obviously, you still have to be a business and meet certain provisions. And this loan specifically is what they call conditionally forgiven, which means that the loan that they're providing you can either be paid back if you choose to, or if you choose to abide by their directives, then they'll forgive this loan. Now, for this loan to actually be forgiven, it requires that the business operate in such a way and spend the money that they receive on certain qualifying expenses, as well as maintaining their payroll, which means that they can't just fire, or if they did fire, they have to rehire to ensure that they get this loan forgiveness. Now, there's a number of points that I really want to bring up as as it relates to this Paycheck program is a qualifying expense, right? And normally this is, if you receive money from the government, then they'll say, okay, well, you have to spend it on business related capital, right? You have to, if you're a restaurant, then you have to make sure that this money is devoted towards tables and chairs or food or things of that nature, right? And that ensures that their money is being spent properly and that the businesses aren't just taking that home as take-home pay or paying themselves more as opposed to maybe giving it to their employees. Now, the thing about these qualifying business expenses is that money isn't discriminatory. So if you have a pool of funds, it doesn't necessarily matter whether or not you're spending money from your right pocket or your left pocket. A dollar is a dollar no matter where it's actually going to. And so businesses, even if they don't need it, right, given this idea of providing aid to all businesses under these type of provisions means that, so even if I don't qualify, I'll let that be the bank or the credit union's decision to tell me that I don't qualify or whatsoever. And so what I will do is, as a business, even if I don't need this money, what I'm going to do is I'm going to go out, I'm going to apply, see if I qualify. Now, if I receive these funds and the government finds out maybe later on that I shouldn't have received funds for some odd reason, and they decide that they want to recoup these funds, then what I'll do is, in the meantime, I'll just keep this money on reserve in anticipation of something like that happening, and then I'll pay it back if they ask for it. So what you're seeing is, because these businesses are all flocking at one time to go towards this free money, then those businesses who have more sophisticated capabilities of applying for these loans, whether or not they have staff on duty that are readily available to actually build out the documentation and submit it at call or at will, are more likely to get the funds first, independent of need, right? So when we think about the government distributing these funds, in the prior episode, we talked about that dichotomy of expediency versus efficiency, right? And this is one of those expedient methodologies that the government chooses to use to get the money out there. And so they use these banks, they through the Small Business Administration, distributing these funds to the banks, and the banks are giving it to the businesses, isn't necessarily the best way of ensuring that all businesses meet the needs, so long as they have reduced the standard on who's qualifying, who's capable of receiving or not, right? This is something that we're doing right now just to ensure that we get this fiscal payout out into the economy as soon as possible. And then what the government will do is, maybe later on, we'll focus on trying to recover the fund. This morning, the DOJ has decided that they were going to actually open an investigation to begin kind of peeling back the curtain on a lot of these businesses that were accepting the funds even though they were qualified, but maybe not deserving of these funds, and begin requesting it back and actually imposing some form of penalty. But when these businesses do that, what actually happens is, if you're a smaller business, if you haven't established a relationship with your local bank, or you haven't really been that active in debt handling or your financial work, then you're less likely to get the money, or you're more likely to get rejected when you do apply because you made some type of mistake, and then you have to go back home and redo your paperwork and resubmit. And so the cost of rejection in these instances is extremely high, right? Just like the example that I had provided about the college campus and the shirts. What you're seeing is that as soon as they open the gates and they say, hey, this is a finite pool of money that we're going to be handing out, then the greedy hustlers come to play first, because they're privy to this type of information. They may have a watchdog that's paying attention every single day to ensure that if there's an open opportunity to get up and grab as soon as possible, then they'll be on top of it. The smaller businesses, the less sophisticated businesses who may be more heavily impacted by the current climate that we're in, the virus outbreak and so forth, are less likely to receive the funds and benefit. And that's what you're actually seeing. There was roughly $356 billion that was devoted towards businesses at large. And within a 2-week period, it was a flat line. It was out, right? And this is a direct result of what happens when you tell everybody on college campus that, hey, we got free shirts if you want them, right? You get people that are in line who have a shirt at home who are walking in the line to get a shirt. That doesn't necessarily mean that they don't want one or they don't have the desire, but that's not the most efficient way we want to be able to allocate these resources. To draw the parallel, that's not the most efficient way that we want to distribute these funds. But since the type of predicament that we're in currently is a we need money now type of climate, then that's just what we're faced. That's just what we have to endure. Another point is that banks don't have to lend. So even if they're given the green light to distribute these funds out, they don't necessarily have to lend to just any business. Most businesses have already established their relationship with these banks. Those are the first come, first serve type of payouts that are going to be given, right? It's those businesses who have already established that relationship. Now, small businesses, maybe that sole proprietor, that mom and pop shop who's been doing extremely well has, maybe seldomly fell on hard times. And if they did, they may have had money on reserve because of maybe some fiscally responsible decisions they made in their past, has enabled them to remain afloat, has never really spoken or reached out to these local establishments nearly as frequently as larger corporations, larger businesses, and the more. So when I say larger corporations, I'm referring to, as of right now, it's 500 or less employees. Banks also may not want to be held liable if in the event there's a new business or a new customer that comes in who they don't have a lot of history on, they don't know much about the ins and outs or the inner workings of their business, and be held liable if this business just so happens to be swindling the government or anything of that nature. And so you'll see this hesitance in lending towards those businesses who are more likely to be less sophisticated, more likely to be of that lower income bracket, or maybe in that startup phase, who are going to be missing out primarily because of this first come, first serve type of allocation. So we also have the economic injury disaster loan. Now this is an actual loan, non-forgivable loan, but this is at a relatively low interest rates. I think it's 2.5% to 3.75% at varying terms, which means that you don't have to pay it back, within the year or even 2 years rather. It leads all the way up to roughly 30 years, 30-year term agreements. And so that's another program that they have available for these businesses. They also have the emergency grant, which is a funding of up to $10,000 if you were incapable of receiving money from those first two programs, the PPP, the Paycheck Protection Program, as well as the Economic Injury Disaster Loan, right? If you were unable or disqualified from receiving payout, or you may have just missed the date or the deadlines or things of that nature, then you're more likely to obtain that grant, right? Now, some of the issues that the SBA was experiencing, the Small Business Administration was experiencing, was that they're not, although they're a well-functioning agency, they weren't equipped with handling so much money at one time. And so the first thing that you saw was the system crash and individuals were being delayed receiving payments. Now you also have these businesses, relatively smaller businesses, who have already laid off their employees. And so a part of the provisions related to these programs was that you had to rehire them for them to receive the forgivable aspect of the loan. Or obviously you can still receive funding if it's available, but to get it forgiven, you would still have to bring them back. Now, this is rather interesting. So from the consumer side, from an individual side, if you got laid off and you just so happen to be in that income realm of $75,000, as I had mentioned in a prior video, that these are the people who are most likely going to benefit the most if they're able to retain the majority of their earnings from the unemployment benefits that they're receiving, plus the additional premiums that they were being paid, that $600 a month, etc., then they may not have the incentive to go back to work immediately just so they can go back to that prior pay, because that would be a reduction in $600. And so you're seeing that small businesses that are trying to rehire are having a rather difficult time. And so time here is the, I guess, most valuable and most irreplenishable type of good here. And that once you lose it, you're done. See, the majority of these businesses, they've done a number of polls, a number of surveys, and they're finding that the majority of these businesses can't survive beyond a 3 to 5 month mark. Even Black-owned small businesses have found that they have roughly the amount of liquidity. Now, liquidity is how quickly you can convert an asset into cash, right? So these Black-owned small businesses have just enough liquidity to extend their business lifespan for about 2 weeks. And so time is truly of the essence in these times. Also, in these polls and surveys that they're doing, they're finding that roughly 7.5 million businesses could actually fall to the wayside and become inoperable permanently if they don't receive funding within their varying time slots. And so once again, just to reemphasize, time is of the essence. For these businesses that are a little bit more agile and can maneuver and navigate the financial system a little bit better are essentially doing a disservice to those smaller businesses. I mean, you had, I think the most notable one is the Lakers. You had Shea Shack. They had taken advantage of this loophole, which was intently introduced into the CARES Act, in that if you were a franchise and you had less than 500 employees, obviously most franchises do, then you still qualify for a significant amount of funding, right, of up to that top threshold, that $10 million and so forth. But what that does is that removes the possibility of these larger corporations from having to seek any other alternative to leverage funds. And so the Federal Reserve's role in it all is to now begin buying out corporate bonds. And now they're going to actually begin direct lending, which is somewhat of a stretch from their normal roles and responsibility in our economy. The Federal Reserve, obviously, they're a centralized banking system, but their role has primarily centered around price stability and promoting full employment. And they do this by controlling the amount of money in circulation and in the economy. But right now, I think conditions are getting so bad for these small businesses, given these stringent timelines that they have, they're starting to become a little bit more involved in the financial matters of the economy. The plan is to begin buying out corporate bonds. Now, what this means is that if I'm a business and I want to raise capital, and so the first thing I want to do is I need more money, and so I want to find investors that are willing to lend to me. But as these investors continue lending more and more money to me, right, my indebtedness to them increases, and now I'm under the assumption that I'm able to take this money from these investors and put it to more productive uses, such that I'll be able to pay it back in the future and still have some left over, right? That is the financial system that they're working under. But the Federal Reserve's role is to provide the type of aid that's going to introduce through the Department of Treasury more money into the general public and substitute a percentage of the amount that the investors are owed. If I have $50,000 that I've obtained from these investors and I'm a qualifying business, I'm of that investment grade, which is to say that I'm a worthy business of investing in, right? I'm not that risky. I'm more likely to pay you back over the duration of this loan. And then I, as the Federal Reserve, am going to provide maybe $10,000 to pay back out to these investors, that would be 20% here, and subsidize some of that risk. And because we're all stuck in this predicament, the Federal Reserve believes that since it's not of their own doing, since it's not because of the business's hiccup, and we don't want to send ripples, earthquake-like ripples through the economy, this would be an ideal position to take. Now, it's going to become increasingly controversial over the next maybe 3, I'd say months, given the great deal of uncertainty that we're experiencing, in that the Federal Reserve's role is becoming increasingly peculiar and involved as our predicament seems to be immovable, essentially. And so the controversy is really centered around this idea that if I'm a business and my best friend owns a business, and during this high season, when everything is going really well, whenever we're in this period of abundance and prosperity, I begin assuming more and more debt, right? I'm looking for investors. I need more money. I want to expand my operations, buy more capital, hire more workers, and serve this economy up, right? That is my endeavor, and that's a fair game, right? That is the system that we're all under. That is that capitalistic motive, right? That's the system. But then you have this other business that during these peak times, these times of great abundance, chooses to set a little bit more money aside in reserve in anticipation for a potential downturn or an inevitable downturn. And so when we find ourselves in the type of predicament that we're in, the question then becomes, should the Federal Reserve, or should the government rather, treat these businesses equally, providing funds to everyone blindly, treating them as if they all are at a great deal of risk, despite the fact that those businesses who are a little bit more reckless and those businesses that were a little bit more reserved behave starkly differently during that high time. And so that is the controversy, is whether or not we should bail out or aid these businesses. So the question that we really have to address is, well, what are the short-term consequences? What are some of the repercussions if we as a government choose to not act, right? Sometimes doing nothing is medicine in and of itself, but as a government of the people, it's always expected that they do something, right? If you see the government doing nothing, despite the fact that everybody in the economy is struggling and facing significant hardship, then it's going to disrupt matters. You're less likely to be reelected come voting season. So when we talk about these consequences, there was this great economist that once said that economics is about the science of answering the question, and then what? And so the government is dealing with this mounting pressure to act. And so they must decide, right, who gets fed and who gets fat and who can stand to lose a few pounds. But in doing so, they're setting a new precedent. See, as an individual, I wasn't involved in the investment decisions that this business was making during this high time whenever they decided to hire me. As an individual, when I got hired onto this company, when they were assuming greater amounts of debt, let's say I'm the business that was acting far more recklessly than, or maybe not recklessly, poor choice of words, but a business that was a little bit more optimistic with their spending, a little bit more carefree with their spending, and I chose to hire a worker with some of the debt that I was able to obtain from these investors, and I hired this worker. Well, as an individual, I wasn't involved in the decision to hire me. And so they, when you go to the interviews, they always ask you, where do you see yourself in 5 to 10 years? And if you tell them, well, hey, I see myself working here for this company and working my way up, not knowing that I'm actually a gamble or a risky asset. Right? When we fall on hard times like the conditions that we're currently in, then the government may not want to allow for these larger corporations to simply fail, putting those individuals who had no type of say, democratically rather, they had no type of say in the investment decisions of the business. And so they shouldn't fall victim to these conditions because the business made bad decisions maybe 2 or 3 years ago. Now, businesses know that. So during those high times, they tend to be a little bit more risky. And so what you hear about is this idea of moral hazard. As the government, as the Federal Reserve, who is now going to be a little bit more involved in direct lending, continues to subsidize risk, the question then becomes, well, are we enabling them? What type of message are we sending to the economy or to our people if we're allowing businesses who are a little bit more fiscally responsible and a little bit more fiscally unresponsible to behave differently, and we provide aid to them and rescue them equally? So I say all that to say that we're in a rather unique period right now, in that you're going to hear a greater amount of conversations centered around taxing the rich. That's going to become a little bit more real and possible. You're going to hear a little bit more conversation around debt. What we ought to do with this mounting debt that we're now going to be assuming. We're going to start hearing more and more discussions about paying people these monthly minimums that are going to be financed by future generations and not immediate taxes, right? As some people would lead you to believe. And if the bulk of the population is between the ages of, let's say, 35 and I believe 45 right now, then we have roughly 20 more years worth of work in ourselves, which is essentially be 5 different unique administrations, right, to where we can reference the current period that we're in as justification as to why the government may have to take that type of action, whether that be the basic bare minimum form of income that people would receive. And so those are my general thoughts on the effects that it's having on businesses. We're still in a rather precarious state. And so I want to continue to provide updates as well as discuss some other relevant issues that are unique to our time. I'm sure people are being flooded with news about the coronavirus. And so in some of the subsequent episodes, I want to kind of shift gears and talk to a little bit more about topics on a micro level. But that's it for today. If you have any questions, comments, feel free to post them below in the comment section, or forward me an email at so.econoclastic@gmail.com. But until next time, guys, take care.